And we do have some people here ready
Okay.
to hear about when to sell a company or when to sell a stock.
Stock. Mm-hmm.
And as you may know, that since this is the last free training of the year, I'm co-hosting this training with Beauty Cut, right? You say hi.
Hi, everyone.
Hello.
Hello.
So Beauty's one of my clients, and I also have another client on board. I'm not going to call her out, but she's on board too. So we're going to get started with talking about when to sell a company. But first, I want to get some introduction out of the way and tell you who I am. My name is Dr. Marcia Dawson, and I am a long-term investor in the stock market. I've been investing for over 25 years, and I'm also a pediatrician. I've been practicing for the last 29 years. So I've been investing just as almost as long as I've been practicing pediatrics. I'm also the creator and the founder of Bookworm Investment Club, and it's a place where I'm able to teach women who are approaching retirement how to make money in the stock market and have that additional income coming in when we retire. So we will have a fabulous retirement. So the monies that you make from your 401k or your 403b or your hopefully Social Security and all of the other sources that you have money coming in, you want to be able to put that a stock portfolio, have that available, so that will also be another source of income coming in when you are in retirement. And so that's what I do. Let me tell you what I'm not. And this is my disclaimer. I'm not a financial advisor, nor am I a registered investment advisor. I don't have any certification when it comes to money. So what that means is that we're going to be talking about some stocks during this free training. And when I speak about these stocks, it is not a recommendation to buy. It's not a recommendation to sell. This, when I mention stocks, it is for informational and educational purposes only. And I also have to tell you this, even though you can make money in the stock market, it does have its risk. You can also lose money in the stock market, and you're going to also see that because I'm going to give you a small peek into my stock portfolio. So the free training today is talking about when to decide to sell a stock. Well, it's all about performance. And either a stock is going to be performing well or not. So when we talk about, okay, so when should I decide to, once you've gotten your portfolio together, you've bought maybe you have about 10 stocks if you've been building your portfolio, and you want to think about, okay, so is there a time when I should sell these stocks? Should I just keep building and building and building? And the answer to that question is yes. There may come a time when you decide, okay, I want to sell some of the shares in a company, a certain company that I have. When does that time come? Well, you should consider selling a portion of a company when you want to take some profit. In other words, you bought a company and you bought at a low price. That price has increased, maybe it has doubled, and you may decide, well, I can continue adding and continue buying, but I think I'd also like to take some of that profit off the table. Because at this point, that gain, that profit that you are seeing in your brokerage account, that's paper profit. It is called unrealized gains or unrealized profit. It only becomes real when you sell it and take it off the table and put it in your pocket, or either leave it in your portfolio. So taking profit is realized gain. That's a time to consider selling a portion of your portfolio when you want to take profit. So with that in mind, what I'm going to do is I'm going to give you a peek into my portfolio. And this is only a small portion of my portfolio, and let me orientate you so you'll know what you're looking at. On the left-hand side here are the shares that I've sold this year. And these are the number of shares I had in the company. This is the name of the company here. This was the original cost. And what I want you to focus on is the green, not necessarily the red, not yet. Let's look at the green here. Now, I started buying these two companies, PayPal and Viva System, back in 2017. So it's been about maybe 2.5 years ago when I started buying shares. And when I was buying shares, I was only buying like maybe 2 or 3 shares at a time on a monthly basis, but that adds up. And so ultimately, since that time, I started buying PayPal when it was $49 a share. And I started buying this company, Viva System, when it was $59 a share. That was back in 2017. Let's fast forward to last month of November 2019. And you see the difference between this number here and this number here? That was actually my profit.
Nice.
So the price in PayPal has doubled. The price in Viva System has doubled. So at this point, I decided, okay, it may be time to take some of that money off the table and do what I want to do with it. And so that's when I sold those shares. And as you can see, I made a nice profit here. This represents the profit that I made from selling just 5 shares of PayPal. And this is the profit I made just selling 5 shares of Viva.
Wow.
Yes. So, how would you like to do that, to be able to do that? And all that was buying the shares and just letting the company, the value of the company increase, and watching the share price increase. And that's all it took. Now, that's taking profit. It can also work the other way. So I don't want you to think that it's all rosy. And that's where the red numbers come into play, because I actually lost money in addition to gaining money. And the reason I will be honest about it, the reason I lost money is because I deviated from my investment plan. When you start, or when you want to start investing in the stock market, you should always have a plan. How am I going to invest? And with this particular company now, these were all marijuana stocks. Well, these two were marijuana stocks. So marijuana stocks are very speculative stocks. And of course, I went in there knowing that they're speculative, so you can either make money real fast with the marijuana stock, or you can lose money real fast with the marijuana stock.
Mm-hmm.
And I was on the losing end. But even though I was on the losing end, I did not get out when I knew I was going to, when I should get out. And that's why this loss was was more than it should have been. And so as part of my plan, I deviated from that plan simply because I kept saying, it's going to turn around, it's going to turn around, it's going to turn around and go back up. Never did. And so I had to say, Marsha, it's time to get out. You're going to take a loss, but just get out. And that's what happened. With my company, Celgene, that was a small loss because it was overtaken by another company. So I got an additional company when they took over this company of Celgene. So that was just a small loss there.
Wow.
Okay. The last two companies in my portfolio, once again, with this company, how many of you all have heard of Zoom?
Yep.
You're on Zoom
You're
now.
on Zoom now.
Yes. Well, Zoom was an initial public offering this year. And in my investment plan, I never invested in initial public offering. That was a part of my investment plans. Marsha, you do not invest in IPOs. And what did Marsha do? Marsha invested in an IPO.
Mm-hmm.
So I deviated from the plan. Sometimes it works when you deviate, and sometimes it doesn't work. And in this case, it didn't work. But I recognized it, and instead of saying it's going to turn around, I just got out. I took the loss and got out. So once again, when you decide when's a good time to sell a stock, depends on performance. This particular performance was very good, and I was able to make a profit and take it off the table, put that profit in my pocket. The opposite end, when is a good time to sell a stock? It still depends on performance. Mm-hmm. When it's not performing the way you want to do it to perform, then it's time to get out of the stock. And it seems very simple to think like that, but in reality, sometimes you have to learn a lesson the hard way, or learn it from somebody else who's telling you this. If it's not making you money, then it's time to get out. Any questions so far? Let me take a tiny break.
Those of you on YouTube, if those of you are on YouTube, you guys can ask questions. I can see from the live chat if you have questions. Otherwise, you can just look for the link down below and you could be able to ask her yourself. And I'll let it go.
Let me see. Oh, I don't have the chat box on. Nakia, do you have your chat box on?
On YouTube, I do, but not on here. Well, yeah, now I do.
Okay, because if I put my chat box up, I'm going to block out a lot of the material here.
Okay. So I can see it.
Okay. So any questions about this my portfolio so far?
Yes, I have a question.
Sure.
You said that you stayed in the, you stayed in the situation longer than you normally would have.
Yes.
And my question is, would you have sold the stock as soon as you saw it declining? As soon as you saw you started losing money?
No.
Okay.
Part of my investment plan is this. See right here where it says percent gain or loss?
Mm-hmm.
Where's your pointer at? I'm not seeing it.
Okay.
Up,
Look,
up there when you said, wait a minute, where?
can you see this now? I'm circling,
Are you pointing at something in particular?
yes.
Okay, okay, I see it now up at the top.
Okay, you see
Okay.
this right here?
Where it says gains?
Mm-hmm.
Uh-huh.
So one of the things that I realized is that stocks go up and down.
Mm-hmm.
They may increase in value and they may decrease in value. What I have for myself have decided is that when I see this stock price losing more than 10%, it gets my attention
Okay.
because now I want to find out. It's losing money.
Okay.
So my question to myself is, what's going on with this company?
Okay.
Why is it losing money? So I'm a person that I look at my portfolio frequently. And when I see this number start declining to 10%, I start paying attention. When it gets down to minus 15%, I'm really skeptical about holding on. 20% down here, that's when it's time to get out. That's for me. Now, as you build your portfolio, everyone is going to have a different
range.
Yes.
Risk tolerance.
Yes. Yes, a different risk tolerance. Some people definitely I should not have not let this get up to 47% loss. But it was just that thought process in my head that, oh, it's going to turn around. It's going to turn around. Well, it didn't. In fact, it kept going.
It kept going down.
Yes. The stock price kept dropping even after I got out. So my lesson learned is, okay, I already have a point of which I said I would sell a stock. But at least if I've lost 20%, I'm getting out.
Okay.
But that's me. Okay?
I think that's a good number. That's a good number.
But everybody is different, like I said, but when it hits 10%, I'm perked up. I want to find out what's going
on with the company.
Definitely.
And do you do that by going back and looking at some of the I really haven't learned all the different lingo, but you know how you research the stock initially to decide to buy it. Do you go back and go through those numbers again and see where they may be adjusting, changing somewhat?
Well, this will be all on your brokerage account.
Okay.
These numbers you would have to, when you have a brokerage account, not only do you have a site where you can pull up all of your companies, but it will also tell you what your gains and losses are. And that's where these numbers come in.
Okay.
So that's all available to you in your brokerage account.
So you're seeing it as it's happening.
Oh, every day you can see this.
As it happens.
Okay.
Yeah. But you don't really want to react on an everyday basis. You want to see what this trend is.
Okay.
Because as I stated before, stocks do go up and down in price. Okay?
Okay.
Any other questions?
No, it just made me look for that stock. I'm just looking for one on my watch list. Okay.
Okay. So let's look at the next, yeah. So, bottom line is this. One reason to consider a sale is one, you have invested in a quality company. Two, there's been a significant increase in the stock price.
Mhm.
And then as a result of that, you want to take some profit.
Mm-hmm.
You want to take some of that money off the table. So, for instance, if you bought a stock at $25 a share, you've been holding it, you've been buying it on a monthly basis, and let's say within a year to 18 months, it's now up to $75 a share. Well, you've made some money.
Mm.
So you can consider taking some profit.
Mm-hmm.
Now, what you do with that is up to you. You certainly can consider buying another company. You could consider looking at your portfolio and saying, okay, I own another stock, and investing in another company in your portfolio.
Mm.
Or you could just take that money off the table and go buy you something nice. And that's what I mean by having the portfolio to add some extra income during your retirement.
Mm. Okay.
hmm So, in order to do something like this, um, you have a choice when it comes to building the stock portfolio. How many of you would like to see some results like this? In the green, not the red, in the green.
Most definitely.
Yes.
Well, you have a choice. You can choose to build a stock portfolio yourself, or you can invest in mentorship or coach and be a part of a community that will help you get results faster. And I say faster because at this point, many of us that are on this free training are usually in an older age group. We may be thinking about more of retirement. Do I have enough money in retirement? So we don't really have that time factor when it comes to being able to just buy a stock and let it sit for a while and watch it make money. We want to get some results a little bit faster than, let's say, someone who was 25 years old and starting to invest. They have a lot of time there to see that market go up and down and up and down. We don't. And so what we want to do is be able to identify a quality company and invest in that company and watch that company make us some money. So in order to do that, here's how I can help you. I have set aside some time in the upcoming weeks to speak with you about the program that I am offering, and that is the Stock Starter course. The Stock Starter course is actually a 9-week mentoring course that is going to start in July of this next year, 2020, new year, yay, new
Yay.
decade.
New decade.
New decade, yes. And what we will be doing on a weekly basis is we'll be going through the 9 different modules that I have developed. We'll have class time weekly. You will have worksheets, and we will get you started on building a profitable stock portfolio. We'll develop that plan that you need to have in order to build a profitable, and the key word here is profitable stock portfolio. So that is the stock starter course. And in order to see if we can help you, all you have to do is book a call, because the truth is everybody's investment goal is different. Everybody's investment style is different. It's based on your risk tolerance. I think Nakia brought that up earlier.
Mm-hmm.
It's based on time, how much time before you really want to start pulling this money out. And so this call is going to help me identify to see if we can help you build your stock portfolio. And when I talk about different people having different investment goals and styles. But yeah, this is one of my clients, BeautyCutright, who's on with us now. And she has a different perspective when it comes to investing and why she decided that she wanted to get involved with building the stock portfolio. So I am going to turn it over to my co-host and let her give her testimonial about investing and how the stock starter course has helped her in building her stock portfolio and a little bit about her goals with investing.
Oh, wow. Okay, well, I am an entrepreneur. I only have, I guess, one job. It's actually a career. I'm an educator at a college, so that's really the only form of, I guess, employment money that I get. But by being an entrepreneur and building businesses, I don't have a 401k. I don't have a retirement fund. Not that I think I would ever retire, but I would love for that to be able to do things and be able to walk away from the many businesses and jobs that I already do as it is. So the stock starter course definitely helped me become more financially aware and educated. That's the most important thing, because a lot of times we're not really aware of our finances. We just spend and live check to check and don't know what's coming in, or when it comes in, we're spending it faster than we can actually use it to invest in. So for me, the purpose of actually starting the stock starter course was to build a retirement fund. But then I realized that I could learn the same method to do exactly what she's talking about, is profit. Use that profit to invest in my own businesses or to take care of my own financial needs and just continue to do it. So I don't consider that I would ever retire from investing. I'll probably be investing until I can't see or do anything. But to I don't see myself ever in retiring from that. I feel like I'm kind of all over the place right now, because I'm like, whoa, I didn't expect for this to be right here. But yeah, I'm only 40 years old. I have enough time to do the investing and build my stock portfolio for retirement. But it's not just for retirement. It's also to supplement my income now and in the later years. So that's why I know I'm going to be doing it for a very, very long time. So yeah, there we go.
And Nakia, you bring up a good point when you said that you're going to be investing in a long time. The thing about investing is that yes, it is work, but this is something that you can do until you close your eyes and go meet Jesus.
Yes.
No, it's true. You know, it takes and it depends on the type of investor you are. Sometimes you can just set your portfolio and go look at it like once a month, maybe. I wouldn't recommend more than, at least look at it at least every 3 or 4 months. Me, I'm a little different.
Me too.
I'm looking at my portfolio
every day.
Every day.
Every day.
But that's just me. That's just me as an investor. I want to make sure things are going well. And if they aren't going well, I'm going to jump on it very quickly and find out why. So, but that's me. And so Nakia was just giving us a reason or some of the goals that she's looking for with her investing. She knows that by building a stock portfolio and a profitable stock portfolio, one, she can actually build several type of portfolios. She can build one for her retirement, and she can build one where she is really
oh yeah, my three portfolio. I have 3 portfolios.
Yes, 3. Yeah.
One is income, so that's the one that I research dividend stocks, dividend companies. So I research those. I do have a retirement one that's under my Chase. That's for retirement. So I really do my research on the companies for that one because I plan to hold those long term. And then my third is kind of like a play around, learning how to, swing or day trade. But I'm more focused on the dividend stock, the income one, and the retirement one as of right now. So yeah,
Yes.
those are my
So,
three
so
portfolios.
she actually has three different types of portfolios. And once you really start investing, you can actually have more than one portfolio. You can have portfolios to do this. Now, her long-term portfolio is the one that she has the dividends. She has another one where it's a short-term
Yeah.
portfolio.
And then one for
So,
retirement.
um,
Yes.
and that's the beauty of investing. It
Mhm.
really is. I have another client that I work with, and I'm going to pull up their testimony. And this was a couple that I worked with. Beautiful couple, Mr. and Mrs. Berry.
Berries.
Now, with their goals, they are actually retired. They're retired, they have their savings together, they have their emergency fund together. They just wanted to make more money in the stock market. And they knew that this was a way that they could do it. And so they were referred to me by another client that I had. I've been working with them, and we actually started from ground zero. I mean, from what is a stock market? How do I make money in the stock market? So they're currently in the process of building one portfolio. And I think they have five, no, they do have five different stocks. So even though they've been through the program, right now they're in the building phase. So we touch bases every month to find out how things are going with them. And they're very, very pleased. So this is their testimonial. So I'm going to show you just what the framework is with the stock portfolio, how to build a profitable stock portfolio. We have actually three pillars. The first is to educate you. The second one is to examine, and the third is to execute. Well, what does all of this mean? This program was built for a beginner, someone who wants to learn from the ground up. And so we first have to start with the pillar of educating you about the stock market, what the stock market is, how you're going to make money in the stock market, where are you financially, what do you want to be, and how can the stock market, investing in the stock market, get you to where you want to be. So that's part of the education. Now, the education has three modules to begin with. The first module talks about that history of the stock market. And then the second module we talk about is we're going to actually start building your portfolio. And in order to do that, you're going to need an account, a brokerage account. There are a number of brokerage accounts out there, but there's only one that's good enough for you. And so we have to find out what account is good enough for you. And then you're going to put in an application and start funding that account. When I say funding that account, you're going to start putting money into that account. Because in the next module, we're going to have you looking at companies, making a list of companies that you would like to own. And yes, I did say own, because once you start buying shares in the company, you are a partial owner in that company. And we need to start thinking like that. I own this company. And so we want to start, we'll show you how to look at the companies that you want to actually invest in. And then you're going to build a watch list, a digital watch list on your computer. And so this is a part of the education. And then we move to the next pillar, which is examination. With this pillar, we start to examine yourself and taking a look at the type of investor you are. Because depending on the type of investor you are, that's the type of portfolio that you're going to be building. So whether you're an aggressive investor, a conservative investor, or somewhere in the middle, we want to focus on building that type of portfolio for you. And so we need to figure out the stocks that you actually, or the companies that you actually want to buy. How do they fit into the type of portfolio that you want? Does it even fit into the type of portfolio? And then once we figure that out, the next module we look at is we've narrowed those stocks down. Now we want to analyze the stock. We want to see if this stock is going to be a profitable stock, because we want to build a profitable portfolio. And so we're going to break down how do we analyze the stock just to see if it can be profitable. What has it done in the past? Because if it's been profitable in the past, there is a good chance that it's going to continue to be profitable in the future. That's the kind of company we want to buy. And so with these two modules, we give you an overview of what the analysis process looks like. And in this module, module 6, we actually start analyzing the stock. And then we move over to the third phase, and that's starting to execute. Because now you're going to buy stocks, but you're only going to buy a stock based on the fact that if this is a profitable stock that's going to fit into the type of portfolio that you want to build. And there are various ways that you can buy a stock. And so we go over that in module 7. In module 8, we talk about letting go. Just like we talk about when is a good time to sell shares in your company. That letting go is module 8. So we'll talk about when is it time to sell a stock. And then finally, we talk about how do we go about protecting your profit. And that is all about rebalancing your portfolio, which is something that you should be doing every year, because you don't want to have one company taking up too much of your portfolio. Mm-hmm. And so we talk about how to protect your profits. So that is the Stock Starter course. And once again, the course is going to be starting in January. Yeah. And if you're interested in speaking with me to learn more about the course, you can go to bookworminvestmentclub.com, book a call. I'll be happy to speak with you. Now, the call is going to last about 45 minutes because I want to get as much information about you as far as your goals, your risk tolerance, your time frame, just to see if this is going to be a good fit, because it is a commitment. It is an investment. Mm-hmm. This whole process is of building a profitable stock portfolio and building a plan to do that. We want to start off on a good foot on January I think it's the 7th.
The 7th, yeah. Mm-hmm. He's starting again.
We're going to start off.
Awesome.
Okay. Anybody else have any questions for me, either about investing or the Stock Starter course? I will be happy to. I'm going to stop the share. And let's see. Let's pull up the chat. So if anyone wants to ask a question or either just put something in the chat, I'd be happy to speak with you about it.
Cool. Even on YouTube, guys, if you're listening, hi. You can.
Yes, hi YouTube. I got the Zoom over here, and you have the YouTube.
Yes. I told them I would be live on here.
Yeah.
Let them know what they're learning.
So I'm also going to tell you this. I also have one of my clients on with us now.
Another one.
I have a client on with me now, and what I'd love to do that she said to me, we were talking about the course, and I was asking her about, well, what do you what do you really like about the course so far? And she was saying the course is good because it is a step by
Best.
step process. You're building on um, every week. Every week we're learning something new, and so it is a step by step course. So the plan is to take you from a novice investor, building a portfolio, and being able to manage your own portfolio. Because believe it or not, you can actually manage your portfolio. Once you learn the steps to doing it, you can do it yourself.
Mhm.
Right, Ross?
Steps are easy. They're very easy too. I've been watching
Yeah.
all my stocks go up. So,
Take advantage of it because you know what? It's gonna be a time where it's gonna crash.
crash. Yeah, so
We are due. Now, I don't know when that is going to happen. There have been signs that are going on this year that have, indicated that it's coming in the next 18 to 24 months, but, who knows? Until that time, we keep investing.
mhm.
We keep on making money.
Stocks will go on sale. That's what you call it.
When the market crashes, stocks go
Stocks
on
are on
sale.
sale.
That is not the time to be bailing out. That's the time to be.
That's the buy low. I mean the what is it? Sell. I mean buy low
Sale.
and wait
Yeah.
so high.
That's when it's time to get in and start buying those stocks when they're on sale, especially if it is a good quality company. Yes.
Mm-hmm.
Yes.
Especially the good quality companies.
Mm-hmm. All righty.
No.
Oh, this is good. 7:46. It didn't take that long.
Uh-uh.
So I don't see any chats and no one in the chat. Nakia, do you see any questions on YouTube?
Nope, not on YouTube either. I
All
don't know if
right.
people don't know
Thank you.
Oh, okay, cool. Nope, no one. Wait, startup company. Oh, what is your thoughts or your viewpoint on investing in startup companies?
Oh. Well, I will tell you this as an investor right now, I tend to invest in companies that are large companies that are going to give me dividends. Simply because my risk tolerance has come down.
Mm-hmm.
And so I'm more of a moderate / conservative investor. Now, I will tell you this, when I first started out investing 25 years ago, a lot of my companies were very small cap companies that were just starting off because they are risky. They may not make it, they may make it. So I tend to not want to be involved in companies like that now. I need to be comfortable to say, okay, I'm putting my money in a company that I know has been around for a long time, that's giving me dividends. Yes, that growth may not be there, but I know that I can get the dividends.
From it, yeah.
Mm-hmm.
So it was like that. One of the well, it wasn't a startup company. It was more so that it decided to go public. We were talking. I remember we were talking about Beyond Meat.
Mm-hmm.
Yeah, I think that. Yeah, it went up really fast and then it just dropped.
Yes.
So, yeah. So I
Yeah.
thought about that. I thought about that company, but then when you were like, I was like, okay, that's all I
But
need to
see,
know.
that once again, that depends on the type
Type
of
of
investor
investment
that
you
you
are.
are.
Mm-hmm.
If you are willing to take that risk and invest in that company, you might be well rewarded in the end. And then again, you may not.
Right. Unless you pull out right before and decide to plummet.
True, unless you bail out right before it drops.
Drops. I think we got
You
another.
never know when that's going to happen.
Okay. Which stocks do you wish you have held on to a bit longer? Or vice versa.
Okay.
We know.
No. I will tell you this. When I started investing back in 1994, I did it with what was going on in my mind was I needed to send my kids to college. And so I invested in Microsoft, McDonald's, Merck, Pfizer, a couple of startup companies. And my only regret is that I liquidated my entire portfolio when my kids were in college. I just wish I would have held on to at least one share of each of those companies because they were cheap back in the 1990s. I think I bought Microsoft when it was like maybe $25 a share.
Wow.
But that was not in my mind. My mind was to be able to, yeah. And so I wish I would have held on to one share of each of the companies that I had started investing in back in 1994.
Wow. So that means.
Yeah. You wouldn't have been able to talk to me.
That's right, Microsoft.
Especially Microsoft.
I know.
How fun.
So, yeah. Those companies. Yeah.
Oh, wait, was it? Someone, she's laughed. Thank you, Melanated and Agenda, for the questions. Anybody else? Just let us know and she laughed at that one. We can hear you. I don't know who Galaxy A10 is or who's on their phone, but we can hear you if you want to speak.
Yeah, your microphone is open.
Yeah, your microphone is open. Okay.
Nope.
Yep.
Okay.
I think we're done with the questions. If they have more, they'll.
Once again, I want to thank you for taking time out to come to the free training. I encourage you to book a call with me. Just go to bookworminvestmentclub.com and set up an appointment to speak with me. We'll talk about how we can get you started building a profitable stock portfolio so you can have an extra source of income coming in, especially all of you ladies who are approaching retirement.
Awesome. Okay. Well, just let me say something before we get off the call. I am the new client here. And I just want to say that, I'm in my 6th week now. And this is a journey that I am really and truly enjoying. And I just want to say, she puts it out there for the people that are approaching retirement. But I have to just let you know that I am in retirement. Mm-hmm. I've been retired for 4 years now. And I'm doing this not because I need it for my day-to-day, but I'm doing it to really enhance, because I like to travel. Mm-hmm. I just recently returned from Israel, and I plan to go to Hawaii in March, and I just want to continue traveling. Mm-hmm. And so I'm going to use this as a way to help me do that in my retirement. So, I don't know where you ladies are, or this is the experience that I'm looking forward to. And I'm looking at my glass being half full. My glass is not half empty. So, this is something I'm determined to do.
Yes.
And I look forward to it. And she answers all your questions. It's very easy to understand. Because like I say, I'm in retirement. So, hey, it takes me a little while to grasp it all, but I have the information in front of me that I know that eventually this will be second nature to me.
Mhm.
But I'm looking forward to the learning experience that I have here. I'm taking full advantage of
And let me tell you, it's a pleasure.
it.
And just, no, I'm serious, because she comes ready to work. The homework is done. All we have to do is just do the question and answer throughout in our meetings, and it's a joy. It's a joy when I'm working with someone who is ready when class starts, when class is in session. You are ready.
And like you say, I even joined tonight because I am just eager to learn any and everything about investing. Any little tidbit that I can pick up, hey, I'm all ears.
Thank you, Ron. And on that note, thank you, everybody else. Remember, book a call. Go to bookworminvestmentclub.com and make your appointment, and we'll chat and we'll get you started in the class in January. And that's it. Everyone have a fabulous rest of the evening. Take care now.
Bye.
Okay,
Bye, Rosalind.
Good night.